Hey guys, back for another weekly outlook video here for the week of June 10th as we move into another week of June. Let's just start off with some news moving into this week. So we've got some big stuff on deck. Monday, there's nothing. Tuesday, relatively nothing. Wednesday, we've got that CPI Consumer Price Index report coming out. Crude oil inventories coming out at 9:30. This is all Central Time, by the way. And then 1 o'clock, we've got that Fed funds rate, FOMC. So Wednesday is going to be the big, wild, volatile day. If you're looking to take a day off during the week, you may want to sit this one out. And then Thursday, we get hit with core PPI and PPI, the Producers Price Index. And then Secretary Yellen comes out and speaks at 11 o'clock. And then Friday, we've just got really that prelim University of Michigan consumer sentiment and inflation expectations report that drops at 9. So if you're looking for where the moves of the week are going to tend to be, will be around these big reports that come out at 7:30 in the morning, the CPI report and the FOMC Fed funds rate day by Jerome Powell. He'll be out at 1 o'clock, and then they'll probably have that, or they do have that press conference at 1:30 in the afternoon. So that Wednesday will be that big day. So we'll be on the watch for that as we move into deeper into June. Keep an eye on these probabilities of where rates are going to be. We're at 5.5 right now, so the odds that we are going to either remain the same or drop 2 quarter points from 550 down to 500. Anywhere in that range has about a 96% chance at this point, or probability. Again, I'm still skeptical. I've seen this song and dance before where these probabilities get jacked up, and then as we get closer and closer, these start to deteriorate a little bit. So we'll keep an eye on that. I know the European Central Bank has already cut rates. I know the Canadian central banks have cut rates, so it's likely that we're going to see some kind of a movement. But again, we're in a pretty big election year here, and I'm just not sure that we can trust the sentiment given the track record and given the election year. So anything can really happen. But we'll move on from there, and we'll go to the charts here. We'll start with the S&P 500. I'm not going to go through the process on how I derived these levels, as I've done it a million times. And I'm going to go ahead and just defer you to that top-down multi-time frame analysis video on my YouTube channel that will show you how that's done. But for this week on the ES, we've got a couple of anchors here. The bullish anchor to the upside is essentially just Friday's swing high. 53.85.50 is going to be that upside anchor. And then I put these psychological levels on here just to notate that they're there, and you're going to probably see some resistance. So you may not see that straight line or that straight rally to it. There's probably going to be some resistance at that 5,400, but this is just kind of the way the structure fell this week. And anything above here is done with the Fibonacci extension. So know that the upside, and it's true for the Nasdaq too, everything on here to the upside, we're now knocking at all-time highs, which is 53.85. Anything above there is not based off of the data-driven levels that you're going to see from the downside. So there, just notate that differentiation. But that upside 53.85.50, we move up, break through there. Likely we're going to bust through that 5,400, move up to that 54.23, and then on up the chain 54.58, call it, and then 5,500 to that upside. If we do indeed have that bullish breakout week to the downside, 53.29 is that downside mark. That's going to require us to lose 5,300, which is where price is currently kind of oscillating around. So we're real close to that. So we'll watch to see if price can lose 53.50. Likely that we or there's a chance, obviously, you can lose it and recover it. So we'll just keep an eye on that barometer. But then to the downside, you got that 5,300 to the downside, likely going to be some resistance there. But that first target, 5261.50, if we truly start to retrace and break back down here for the week, that's target 1, target 2, 5205. And then down to 51.54 for this low end structure level right here. Let's move on to the Nasdaq. Nasdaq is very similar in its structure as they're obviously twin sisters of each other. We've got this sweep of on Friday we had this sweep of these highs right here and this sweep of these lows right here. We didn't really go anywhere on Friday, but there was a wide range that swept. So the breakout again to the upside, this is going to be this is the bullish breakout again. These are Fibonacci extensions up here. So as we move up the ladder, 19,155 is that bullish breakout to 19,310, up to 19,485, and then up to 19,633 to the upside. To the downside, you've got that psych level of 1900. That price again is oscillating right around. And then we break that low here, that swing low from Friday, 18,938 and a quarter. Likely we're going to move down and retrace this entire value area here and then hit this structure right here at 18,755. Break here, we're going to likely move down and retrace this value area here to this value area low of 18,582. And then we break there. There's a swing low down here at 18,338 and three quarters that we're likely going to head to. Let's flip over to crude. Crude oil, a little bit different. On crude oil, we had this big sell-off over the last couple of weeks, and we're kind of pulling back a little bit on there. So this swing right in here, or this little pullback here, is really the test, this pullback in a downtrend. We break back above here. Likely we're going to hit this 77.51. The 76.27 is that upside bullish anchor to retrace back to the upside. And then 79.26, 80.64 is that high swing high to the upside here. And then to the downside, I had to go back in history a little bit to get some of these levels that are these price points down here, but go down to that 72.44. We break down here. Likely we move down to that 70.94, 69.53, and then 68.35. Those are the levels this week. Again, check out my YouTube channel if you want to see how these levels are produced. I've got several videos on there showing how I create these, and I will update you on these throughout the week in my Substack newsletter. Everybody have a great week. We will talk soon. Thanks.